Let's bring in Richard Bernstein. He's the CEO and Chief Investment Officer at Richard Bernstein Advisors. Rich, I can't wait to hear. Where are you value hunting? What are you steering clear of? I have to imagine you're loving the cyclical story here. Why do you think the market's doing so well today? What did you make of the Amazon quarter? So many questions.
So I don't know where to start, Kel. I mean, I think, look, I think the broadening of the market, we've argued for some time that it would be extraordinarily healthy if the market broadened. And that's really been going on since the end of October, more or less. I mean, fits and starts, but it really started in October. And I think that this is very healthy. You know, I think people don't realize how strong the overall economy is. Nominal GDP last quarter was over 8%.
Wow.
Excluding the post-pandemic, the United States hasn't had a nominal GDP quarter over 8% since 2006.
Wow.
It's been 20 years. So why you would have a narrow market when you've got GDP, nominal GDP over 8% is mind-boggling. And so what you're seeing is actually the market begin to broaden in acceptance of the economy, and the corporate profits are turning out to be much stronger and much broader than people thought.
Is there any of the Mag 7 you like here? You know, NVIDIA is up 7% today.
Well, Kelly, I'm going to beg off on the question because we are very much a macro firm. And one of our stories has always been that we don't know anything about Coke versus Pepsi. And so I will say I don't know anything about Microsoft versus NVIDIA as well. I can tell you that the key thing, and I've said this many times with you before, that the key thing for the Mag 7 is that they are fine companies. They are not unique. There are many companies in the United States and around the world that are growing as fast, if not faster, than the Mag 7 and are a lot cheaper. So my question would be, if you can get 20, I'm going to make up these numbers for a second. If you can get 20% growth for 40 times earnings and 20% growth for 20 times earnings, why in the world would you not take the 20% growth for 20 times earnings?
And where are you seeing that kind of profile? Now, for instance, Eli Lilly earlier this week reminded us they've got 40 and 40. They've got, 40% revenue growth. They've got 40% operating margins. That's $1 trillion company. Where are you seeing places that are as fast growing, 20+% as you mentioned, but trading? I mean, Microsoft's trading at like 20. I'm like, the company you're describing sounds to me like Microsoft.
So, Kelly, I'm going to sound extraordinarily boring here for a second. And I'm just going to say, if people are willing to look outside the United States, you will find earnings growth is accelerating in many parts of the world. It's not that U.S. earnings growth is imploding. It's not. It's actually kind of leveling off and maybe coming down a little bit. But outside the United States, you have profit cycles that are actually coming up. So you're getting, I don't even think you have to be very sexy about this. You just have to have non-U.S. investments. Most U.S. investors have zero in non-U.S. So I think this is a pretty easy thing to figure out, that when the non-U.S. markets are 35 to 40% of the global equity market and U.S. investors have less than 10%, I don't think we should worry about a specific stock or the optimal weight of non-U.S. It's just, do you have any non-U.S.? And I think that will solve the problem. I
always worry a little bit about the dollar. Do you think that's just the moves you're describing are so powerful it doesn't matter if the dollar appreciates a couple points?
Well, that's a good one. I mean, usually people ask me the other way. They say, well, the only reason non-U.S. outperformed was because of the dollar. And my answer is, well, so what? I mean, I don't want the return coming from currency. Now, your question is the exact opposite. What happens if the dollar appreciates a little bit? Yeah, I mean, that would be a little bit of a prevailing force against them, but I don't think it's enough to make that much of a difference. And if the Fed is cutting rates into the strong nominal GDP environment, the odds are the dollar gets weaker, not stronger. And I think most people would argue that the Fed is still on a rate-cutting course.
Do you worry, it's kind of go back to the concern in January and after Warsh was not, we was just talking to Larry Lindsay about that. I mean, do you share these concerns one way or the other, either about dollar debasement, you got to own gold, you got to own silver, or the flip side, which is now, hey, we might be in a hawkish stance, and so, the momentum trades are pulling in their reins, and then you can argue about whether or not we're actually going to be in that stance. Are there any macro narratives that you find believable here, or does it go back to the 8%
I think there's actually several that are going on that are quite believable. I think number one, although it's great to talk about dollar debasement, I think that's a little hyperbolic. Will the dollar weaken? I think there's a fair chance the dollar weakens. But there's many ways to play that. Yes, you can play it in commodities. But again, just to repeat what I said before, you can play this in non-U.S. stocks. Remember, when your currency is falling, it's always good to have assets in appreciating currencies. Mm-hmm. So, why not invest outside the United States if you think the dollar is going to weaken? The other side, though, is that what's really been driving crypto, the Mag 711, has been a lot of speculation, and liquidity is the lifeblood of speculation. And so if the Fed nominee Warsh turns out to be more of a hawk than people expect, then your liquidity is going to, on the margin, dry up. People used to call this the Fed taking the punch bowl away from the party.
Right.
Right. And that was the old saying. So maybe that happens, but that's an argument that you want to look at fundamentals and not at speculation and momentum. Fundamentals, as I tried to say, you've got a broad range of companies that are doing quite well.